all you devils. How we doing? Sam here with you. We're kind of middle of the day here on the 8th. I thought perhaps we'd let some of the volatility die down, which we have now started to see. Well, we've certainly seen some pretty dramatic volatility here. Now, we're going to stick with this format here. I'm going to try and get through, I don't know, I've got 10, 11 FX pairs here. We'll just do kind of a quick snapshot of these, and of course, members, right? If you want a deeper dive, right, all you have to do is ask for it, work with the senseis, and we can dig into some of this. But here, if you're watching on YouTube, you know, understand that we're gonna stick with this format here. We're just gonna do sort of a short snapshot here, and if you're interested in, you know, learning more about what we do and how we do it, how we work with our members, all you have to do is just reach out to us, and we're happy to answer any of those questions for any of you that have an interest here. So with that said, let's do a quick spin through some of this. Okay, now, so here, before we get into it, I should have just prefaced with this. This is an important point, and I've stressed this in many videos before, but I want to re-emphasize it here as we're going to spin through these quickly. I mean, it really is an important decision tree you've got to make if you're going to approach the FX markets early on in terms of how you want to approach the market. Now, my suggestion, right, and this is 20 plus years of doing this, particularly with our methodology where we're combining Elliott Wave fib relationships and fib swing relationships with market geometry, the opportunities are so much greater, and the technical analysis is so much easier to read if you're out on the much longer term time frames. The biggest mistake by far, bar none, I defy anyone to challenge me on this. By far the biggest mistake people make in FX, and the reason that probably 98, 99% of FX traders lose money is because they're trying to trade short term. And there's, I mean, just a massive industry infrastructure that is set up to take advantage of retail traders that come in to try and trade short term, and they don't know what they're doing. They don't know how market makers manipulate them. It's just almost impossible to make money, really, unless you're truly spent years mastering the way the markets move intraday. If you're talking 15-minute and 60-minute, right? Now, members, we're going to do some detailed training on this for those of you that are drawn, right? We want you to have that information. I think what you'll find is that unless you have the time to sit in front of the markets, at least a good 3-4 hours a day, that I think you'll come to the conclusion, as I have, since I don't have that time anymore. You got to look long term. You got to look out on the daily, 3-day, weekly. Now, certainly you can go down to shorter time frames to confirm a count or look for some sort of subdivision, something that you might be trying to focus in on. But here's the problem with this approach. It makes your FX trading boring, and that's exactly what it should be. Boring. You have to think of it. Excuse me. You have to think of it a bit like equity trading. Well, you know, I mean, again, of course, you're right. There's day traders that are scalping in and out of highly liquid equities on a daily basis. I mean, certainly that's a part of the entire trading experience and the options of how to approach the market. That's out there, right? That's not likely to change. But unless you are a specialist in that, for the typical trader, and let's say traders that are not specialists but are looking to get into the markets, see some returns on their efforts. You know, if you're an equities trader, daily charts are where you want to play, right? In my opinion, right? Take it for what it's worth. Now, and so I would tell you it's the same, but even longer term in FX. And again, that's the problem. Most people, they want it. They think of FX. Oh shit, I can open an account with $300, $500, $5,000. Likely, the odds are so stacked against you. I just would want you to think twice about doing that, right? Or if you've been doing that and you're not successful, consider making your FX trading much, much more boring. So we're going to start here with the dollar index here. I mean, everything we're going to look at longer time frames. And I think you'll come to the same conclusion, right? I mean, if you've done this. So this is a 3-day on the dollar, right? So we're talking about the 01, excuse me, the 01 high here that goes down to the middle of 07 low, right? Almost a 7-year trade, right? I mean, so who can that right? Hard to stay in that, right? Who stays in that? Professional money managers, algorithms, banks, right? I mean, the average trader cannot do it. You just can't, right? If you caught this much, right? I mean, if you caught this much right here, the temptation to take that profit would be absolutely overwhelming. I mean, shit, what do we got there? Just here. I know we're supposed to be getting into this, but you know, there's almost 1,700 pips, right? It just very, very, very difficult for the average trader to not jump all over that. And that even that right there is half the year. Good 4 or 5 months. You're in that trade 4 or 5 months. You're up 1,600 pips. Very hard to stay with it, right? But look how much, right? I mean, could you stay with that for 6 years? I mean, shit. I mean, how long people have been long? You know, name your equities, right? These are long-term trades, and you've got to think of it that way. So here, just as we go through this, I'll give you some examples where you just the wave counts are changing so fast on the shorter time frames. You almost can't apply this methodology on the shorter time frame. You really have to stay with a much more simplified approach. But if you're drawn to this kind of analysis, oh shit. What do we got there? Okay, something happened with my feed here. If you're drawn, the point I'm trying to make, if you're drawn to this type of analysis, I pull up a 30-minute chart and then pull up a 3-day chart. You tell me where the technicals are easier to spot. All right, so shit, I'm already 6 minutes in, and I haven't even looked at this yet. All right, so we can spot the clear 5 down. All right, that I think we can all agree there. You don't have to be a master Elliottian to get the 5 down. Now, it gets a little tricky in here. So we get you see, it's tempting to want to look at this and go, oh, it looks like 1, 2, 3, up. All right, so this would have been an overlap, but because I've got a clear impulse here, see from here, right, clear impulse in there, I can't ignore that. All right, so I can't have that, right? So I can't have this. It's a force fit to try and turn this into an ABC. It's an impulse, right? So with that overlap, process of deductive reasoning with the pivot here at the golden zone off the low, swing high to swing low into the golden zone. Yeah, we break by a couple of ticks. It's a very slight break, but look at the reaction, and we react down with 5. So it's again. All right, shit. Again, of course, things can change. But right now, as we look at this, I think you've got to trade this as an ABC, right? So with the 5 down and the ABC here with the break here. So that if you were questioning, God, could I have an impulse here after this impulse down? You might have been questioning here because you would have been thinking 1, 2, 3. If that holds, I'm going up for a 5. Maybe something else is happening. But with that break, and because now we can see the clear 5 here. Now again, remember, I'm on a 3-day chart. Right, so this is, what are we, middle of 16 to the February of 18, right? A year and a half to put that impulse in. With that established, now we don't have great subdivision here out here at this degree, right? It almost looks like it's another impulse. So looking at that, so if it is an impulse, maybe we've got something like this going in before going down. Right now it's just internal, but if we look at the pivot, right, from here to here, we've broken the golden zone. Now, so certainly it could be A, B, right? Wouldn't be any sort of invalidation. Now, we don't have classic, right, just what you'd hope to see, something like that. We don't get that clear subdivision, but with that break there, the process of elimination, you're kind of linking, okay, if that's A, well, my B certainly can go that high. If this now starts to roll over, then I get more confidence in where I am, and then thinking, okay, if that's the B, I'm looking, well, at the very least, we're going to come down and challenge this structure as we did here. So if we're going to come down a little further, something along those lines, well, then, you start to think, well, maybe there's something more substantial going on here, and that perhaps we've got 1, 2, right? So we've had 5 followed by 3, so potentially 1, 2, right? Now it's too soon to make that prediction that we're going to see that sort of dramatic sell-off in the dollar. Of course, at the rate that they're printing dollars, you could kind of see how that could happen. But it's too soon to go there. So right now, I've got a 5 and I've got something that's correcting here, but I don't have enough confidence in what's there to say, well, that's clearly a 3, right? Because actually, it kind of looks like a 5. I mean, if you go down to a daily, it kind of looks like, is that 1, 2, 3, 4, maybe, right? So you're a little unsure there. So you're kind of stuck here thinking, okay, this I can see clearly, this I'm a little unclear of. So what I would just kind of wick this off here. I mean, this. So I should caution that I almost never will trade the dollar index, right? So that's not the play. If you're doing your analysis out here, you're likely to take that to the spreads rather than trade the dollar index. Not that you couldn't, right? I mean, it's just not something that I do often. But you want to have this as a reference, so you got some sense of you have some sense of strength or weakness of the dollar, right? So right now, what is that? Well, hard to really pull any subdivision out of it because we haven't had any decent retracement. So even just looking at it, right? We got nothing and no pivots here. 38's the best we've gotten, right? There's the deepest one right there, 30, and we don't even make the 38, right? So Vegas wave's holding it. There's nothing quite there yet enough to suggest, okay, here even now out on the daily, what do I have? If I were to get something a little deeper, something like that, right? So there's just a clear algo play, golden zone to target, to back to the golden zone, something along those lines. Then you start to get a little more confident in the thinking that now I've got a reasonable trade here that I can set up with excellent risk reward that I might be in for a year or 6 months, but I can get myself positioned because I now have a better sense of the structure here. Right, so something to keep in mind here, right? Again, there's not a trade or something to do based off of this analysis, but you got to keep an eye on this. Right, so right now, this is kind of what you'd hope to see. More clarity, right? Put it that way. All right, so shit, I'm 11 minutes in. Trying to make these shorter. Okay, so now let's go look at the yen. Excuse me, let's look at the euro, right? So I'm just going down. Oh, we'll work through all the majors, certainly. So here, again, you got to pull out to the 3-day to get some sense of where you are. Okay, so looking at this, it does appear, I'll take this off for a second so we can see more of it. Right now, I've only got, I'm back to 2002 here on O&A. So per that, it does look like I got a pretty clear ABC into a W, ABC into an X, and down here I can finish the ABC to give me the Y. Now, given the potential Y here again, right? Well, we'll do it in a second. Out here on this 3-day, I get a pretty good idea about that Y there, right? So I can see, the 1, 2 is a bit of a stretch, but the 4, 5. I can see that pretty clearly, right? So the WXY is a contender barring this pivot being taken out, right? So if we take that out, we invalidate, so something else is happening, and perhaps we're into a WXYXZ, something else may be happening there. But right now, I've got a contender for a good low per all of this history. Again, we're talking about 08 to 17, almost 10-year trend, right? Again. Again, banks, hedge funds, algos, that's who can stay long or short for that long a period of time. But look what happens here. So if this is the Y, we get a clear impulse coming up. Again, very hard to see it on the shorter time frame, but you can see the clear impulse and we go right up to golden zone. So just thinking about it, like, would that make sense? Okay, I've got a contender here for my Y. I've got the ABC completing. I go straight up in 5 and I bump right into the golden zone from that pivot, right? I mean, it's just classic algo play. Okay, so with that, now coming down here, this correction, much like the dollar, right? Because this is where the bulk of all currency trading is happening, dollar and the euro. So if we look at this, you can see it's the inverse of what we were looking at over here, right? So this is like, what the, not great subdivision here. Same problem here, not great subdivision. So you got to go down. Let's go. Oh, there's the daily, right? So here's the point I was going to try to make. I'll put that off to the side. Okay, let me go. Let's go to a 3-hour. Let's see if you can see all of this. Okay, look at this. Okay, what's the count here? What's that count? Right? How's your subdivision looking here? How about here? How about here? Can you get a count in there? Yeah, you can. You're going to have a high degree of confidence in whatever this is, right? You're going to have a high degree of confidence in that. I wouldn't. So let's go back out to the daily. Can we make this, can we simplify this a little bit? Well, here, let me take that off so we can see a little bit better. Considering I've got a 5 straight up that's almost impossible to miss, just like the 5 down in the dollar. So because of that, so I can kind of do some deductive reasoning here. So I can look at this and go, okay, looks like I got some sort of a 5 coming down here that would give me my A wave. That looks pretty solid. Let's get that down here. All right, so it looks like I've got a contender here. I can see it out here. I can see the 5 down. Now it looks like, yeah, it's skinny for a B. It's shallow in terms of a retracement. I am coming right up to the median line, but I can get the 3 into the 5. Now this gets a little tougher here. So yeah, you can get it, right? So that you can get the 1, the 2. Now you got to go A, B, C to make that work. Now we've had the overlap. So here's the wave 1. So the contender here for the diagonal is legit, right? So I've got all the right ingredients here. I got the 1, 2, A, B, C. Looks like A, B, C into the 4. So I've got a reasonable contender. Now we're always looking for something technical on the 4 relative to the start of the 1. So right from this pivot, right through the pivot of the proposed 3, well, I'm at the 38 to the tick, right? I got a high volume node here. So, right, so you guys know this, right? 70% of the FX volume is from 6 or 7 banks, right? So they need these kind of high volume locations where they can not reveal what they're doing. So this is a reasonable place to be considering. It's a candidate here for this move down here to finish. And so we'd get an algo target here. Now could be there, could be the 2 to the 3. Now we go to the 2 to the 3 and we're right at the 50, right? Now again, that's, you know, you would want to check them both, right? So if you're not at the 50 on the, if you're not at the 50, which is what you're looking for, pulling from the start of the 1 through the pivot of the 3, I mean, that's a pretty good, what do you got there, right? So from the start of the 1 to the pivot of the 3, you got 900 pips, right? So it looks like the little ABC is there. That's a contender to be done. Switch that back. So you've got a reasonable shot here. So I would be looking at this point for any signs of weakness here that would suggest that we've got the potential here to come down and finish this, hit that algo target. So I'm just working, the pivot is from this 2. So here's the algo play. There's 50 to the tick, looking for that to finish, right? There's your basic, right? That's the DNA of the market, right? Doesn't matter what market it is. I've said it 1,000 times, shown it over, probably 1,500 times now. So the pivot, swing to the 50, right? I get a pivot, so I think there's a reasonable play here. Now, as I've said before in other videos, the highest risk in FX is when you're first going into the market. Right? That's when you're most vulnerable and the highest probability of getting stopped out by the shenanigans that happen in FX. Right? So you've got to give plenty of distance in your stop. So the size initially has to be small enough to accommodate the size that you would need to put in here. Right, so to give that enough room here, anticipating the pivots in, if you were taking that trade, you got to give that plenty of room. You can't be right here. Just overnight they'll widen the spread enough to get you out. Right, so you got to give it enough distance up here, so that you're not vulnerable to that. All right, and now note it here. So look what I'm doing here. All right, so from that to that, there's 100 pips. Right, so you're not. You know, that's a fairly big stop, right? If you're talking about a full-size position here, right? So maybe some incremental, maybe micros, maybe minis, right? There's a way to get positioned in this, right? So now we've got the market moving down enough so you could maybe tighten your stop up here. But again, you got to be careful because they love to do that, right? They absolutely, you can almost see it here, right? So it's very, very consistent. Almost every pivot you'll see there'll be a double top there because that's what market makers are doing, right? They're just accumulating the shorts and they're trying to bait the retail trader into going long. So almost every pivot you see, there'll be two wicks up there, right? Sometimes they'll be side to side like you're seeing it here. They'll be right there. Right, you see those? I promise you that's what's happening there is market makers are trying to bait the retail trader into going long, thinking, oh, here we go, we're off we go, and all they're doing is accumulating the shorts, right? So down it goes. So now again, right, you see it on the other side here, right? Same double, right? So usually it's a double bottom with one pivot slightly lower. So when this starts to head down, right, it comes here. They think, oh, it's going. Oh, we're going, right, and that's when they rip it back up, right. So again, members, we're going to do some detailed training on that. It's not that it's complicated. You just have to know what they do. So here now, looking at this, right path of least resistance would imply that down for the target. So anything here that would give you a retrace. So the idea that we might get a 1, 2, 3, 4, 5, right. That's what you want to be looking for. All right, I'm taking too long on these. Let's go back here. All right, so let's go to go to the pound here. Oh shit, back to the 3-day here. God, the idea here with this format was to make this shorter, but it's hard to do this many quickly. Okay, so let me pull that off to the side. Let's reset here. Okay, so again, I'm out on my 3-day here. I'm gonna have to scrunch up a little bit so we can get this all in. Okay, all right, so no shortage of volatility in the pound of late. So here's our pivot up here for 07. So I've shown this many times before. Here's the front run on the 50. It's algo target to the tick, right? So, you only had to be in that from this pivot here. Only 2 years you had to wait for that to complete. And the question is, are we complete? So you get you get this funky ABC here that takes us into that 50, which is likely the front run, which is tied to this, right? We've looked at this before, right? So structure, all right? We get a little pivot up here, down we come. Now, are we done? Well, it's a tricky one because the size of the 4 is so substantial relative to the 2, length of time, right? So the symmetry's off. But you can get a count that plays here, 3, 4. Now, are we going to come up short here? Remains to be seen. Right now, all you can say with certainty here, we've got a technical pivot here. We go down, we go right to golden zone. And then we move down again and again, golden zone, right? So you can see, right, I mean, you know the algorithms are in here, right? Of all places, they are all over it in FX, right? So here, golden zone, down we go. But we don't have target met. So here, this met reaction, it looks like we go up in, it looks like it's more of a 5, but it's a little easier to work this into an ABC. Right, you have to do A, B, C to get it there. Now, again, it looks like A, B, C down. So it doesn't look like a clean 5. But what can I see? I can see here I go right to golden zone. So again, right, that's a high probability, low risk place to be a seller. That would come down here and we'd finish this 5 to where you could kind of wrap your head around it and go, all right, I can, that 4 is a little bigger than I would have thought. But I can see how that makes sense. Now, if this turns around, we break up here, then you're back down here thinking, well, shit, I mean, it's not like it's never happened before. Maybe I've got a truncated 5 here. But I don't like the structure here because this would have to be 4, 5, working backwards. That's 4, 3. The 1, 2 is a bit of a stretch, right? So this would have to be 3, 4, 5. Questionable. So thus the thinking that with the reaction here, literally splitting the golden zone, path of least resistance would be down, but there's an opportunity here to be a seller here. All right, again, you got to give it room so that you don't get wicked out. You got to give that a little bit of room. Now I'm out here on a 3-day, so we can go down to the daily and you can see it a little bit better. Oh shit. Get down here where we can see it. So here we go right to golden zone. Now again, does that look like, it looks more like a 5, doesn't it? Right? So you look at it and you think, can I work that as a, right? So, I mean, easy enough to just spot it here. It looks like 1, 2, 3, little triangle, 4, 5, right into the golden zone. Right, and you've heard me say this many times before, right? You don't have to apply Elliott Wave out here. You could just have a very, very, very nice trading career just trading off of, let's get this dialed in, just trading off of golden zones, market geometry. So you have the contender here for a golden corner, right? Just like you did above. All right, let's get that into original recipe, right? So down here where we'd be coming down to get all the here median line, algo target, median line, algo target, all of these contenders are down here. But you got to survive the entry without getting wicked out, right? So something to be watching for. Again, we'll do some more training on that. Members, okay, so trying to move fast here. Shit, this is hard to do this fast. Maybe we'll just work through the measures without going into crosses. Okay, so let me go back to a 3-day here. Pull this off. A little bit of a question mark here because we've got this baseline of support here. The move off of the 2011 low, again, hard to miss the 5s, right? So that's why I tell you guys out here at this longer time frame, you're going to see the wave structure much more easily, and you're not going to be changing the count as often as you will if you're down on that 15-minute or the 60-minute where you're changing it damn near every day. All right, so potentially now we've gone, well, the ABC here looks pretty solid. We come to the 50, we get a reaction, but now we're in this chop. And we've got a contender here for this kind of descending triangle here to put in the Y wave for the X, and right, so reasonable spot would be to look for it at the golden zone that would start the, if that's going to be an X wave, then we'd be looking for the ABC to finish it down here. Reasonable target, since we had already had a reaction at the 50, would be the golden zone. Right, so now it's not there yet. Now, of course, E wave, notorious to underthrow, but you'd want to see that come up a little higher, so the ABC structure of it would be a little bit easier to spot. Right now, you know, what I don't want to see is this start to sell off here, because then I'm a little less confident. Now, you can note here, look here, swing high to low. Oh, shit, I know that's going to be hard to see. Let's go to the daily. We've had the 50, so let's tighten this up. Okay, so that just looks like an ABC into the D here. Now we've come up right to the 50. Now we're starting to push again. So you really would like to see that come up here and bump into that 618. So the ABC looks a little bit cleaner, and you could, you know, kind of talk yourself into, all right, that looks pretty solid. Looks like there's a reasonable spot here to be playing for the short, because I'm anticipating if that's going to hold and that's my X wave, then I'm going to look for that ABC to come down. But that could, again, could be a long-term trade. Could be something that you're in for 6 months, or if not longer. What you know, that's putting us out here into 2022, right? Again, all right, you got to think long-term here, right? And that, not to mention the size of the payday. Right, so you got to park money there, and it's got to be money that you consider invested, not something you get up $300 and you go, well, fucking, I'm gonna take that, right, and then go off to the next one. Not, it's again, right, you can take my word for it. You can learn it yourself, right? So my job here is try to shorten your learning curve, right? I trust me, I've tried it for years. It's a losing proposition. All right, let me see how am I doing here. 20. God, I got to do these in less than half an hour. Okay, so this one easy. We've been through it before. I mean, you know, impulse, three wave, ABC. It's not hard to spot that, right? It's not, you know, just ABC, and it looks like we've got a diagonal into the one. You'd like to see the two come a little bit lower. Some complexity here. Is this ABC, right? Or is this A? We don't have enough height, so perhaps we've got a WXY going in here. W, it's a little skinny on the X, so it's a little bit unclear. Could be an A wave, right? Something. It's too soon to call it, right? So if it was going to be easy, it'd have been, oh, there's a little ABC, right? So this one clears the bell, ABC, we don't get it. So we're getting some more complexity here. So, fairly straightforward. You can just put some, I might do it that way, something along those lines. I'd like it better, deeper. So here, I've got the structure here, but really your buy zone that you're looking for is right down here. So if we can come down a little bit lower and I can get my head around what we've actually got here, which is not clear. So I'm down to the daily. 1, 2, doesn't look like that'd be 3, 4. So what do we got? Unsure. When in doubt, you stay out. But if I could just off the structure, if it comes down lower here, I'd be interested a little bit lower. Right now, too unclear as to what's going on there. So on the watch list, nothing to do. How am I doing? 28 minutes. This, I almost never traded. Right? Swiss, just a chop monster. I hate trading the Swiss, right? So I rarely do. My suggestion would be you not try and do the same. Okay, so let's go back out to our 3-day. This is one we've been watching here because we've been noting the extremes it's been making relative to other currencies here. So I think coming off the low here again, I'm back out to a 3-day. I can work the 4-5 up here. Right, because of the diagonal here, it's a little questionable as to how you're going to count it. But I think you've got to put the 4 in here and allow for this diagonal, right? Even though it's kind of ugly. I think because we double top up here, you can put the 5 here. It looks less like it's corrective. It does look like it's a motive, so it looks like we finish here and then we get the straight rip down. Now note here, we get, and you'll see this more in FX, right? Because, well, partly because people now know about this, but you'll see the little wicks down here at this that stop running, right? So how do you know it stopped running? Well, look what happens afterwards. Right now, see, I mean, if it was gonna free fall here, well, okay, different story. But given that we move off of this low, by what did we get there? 1,260 pips. I promise you, that's somebody got bent over there. Right? People getting stopped out, right? Because they think, oh, there it goes. And you have better technicals from this side here. So if I use that pivot here, so we're right here at the 50. Now there's that target here. So you got some mixed signals. So you could make the case right here that really you've just got a fib fight between algos, right? So you've got the guys, the defenders down here at the 65, although they've been broken now twice, right? So that weakens the case here. Yet again, look at the reaction, right? So you can make a case that that's a 5 that's done. So are we done here with this one day where we wick through the 65? We're going to start to move off of it. Well, so you can look at it this way. So the length of the A relative to the C, I mean, it's proportionally. Certainly one possibility is that you've got the A going in here and you're going to do something like that, right? So, certainly, right? So that wouldn't be surprising at all. You can't ignore this 5. So either it's the C or it's the 1. I suppose we could have no, it's like that's either the C or the 1. All right, this doesn't look like, shit, I suppose we could, but it's too shallow. I was thinking A, B, C into an X, but that's mighty shallow. So because of that, I defer to the B wave here because you'd want an X to go at least golden zone. So I'd stay with the B here. Now, what do we got, right? So how are you going to know? Well, you're not going to know until you get a clear impulse here and then you get the retracement, right? Now, if we start to push off of that, so is there a trade here? Well, this would have been tricky because of the break of the 65. So you might have been reluctant to jump on that. So coming now back down to a daily, if you look at that, let's look at it. 1, 2, 3, 4. It looks like you've got a reasonable case started here for a 1, 2, maybe 3, 4, 5 going in. So that this is one to be watching out here, but there's nothing to do yet, really. I mean, yeah, if you're just jonesing, right, you could go down to now we go to the 8 hour. Again, it gets choppier, much harder to read in here. So now you're looking at the 8. I mean, this is an example where it might make sense to do it because I would want to see, do I really get a clean ABC here before looking to trade the 4 to the 5? How deep are we going? Right now, again, here, I'm out on an 8 hour, so it's not like we're short term here. So I'm looking here. If I come down here, so I like the idea of a retest of the channel resistance here. So something along those lines, which would set up that trade right there. Nothing wrong with that. So what are we talking about there? All right, so there's, that's 300 pips, right? So for FX, that's a relative, per what I'm suggesting to you guys, that's a short-term trade, right? 300 pips. Right? I want you thinking about 800, 900, 1,000 plus pips, right? That to compensate you for sitting with it for so damn long, right? That's the trade-off, right? Again, my suggestion is make your FX trading as boring as it can possibly be. All right, so something like this here, well, that might be a little more exciting, but the risk is going to be higher of this breaking down, right? So how's the subdivision here? Can you get it? Yeah, you can get it. Right, but I wouldn't be trading large size here. Something to think about. Okay, here am I. There's 32 minutes. Okay, we'll do gold. We'll do all the metals on a different day. Okay, so there you go, because I'm already 33, and the idea here was to shorten things. Okay, guys, so there you go. As always, right, you guys know this, right? If you're interested in learning more and just working with us, getting into the belt system, some more detail, everything we do here, while we're doing a snapshot here, gets broken down in great detail, and we do deep dives. As for the membership, so if you're watching on YouTube and you're interested in developing your skill set here, right, keep your eyes open because we've got some new things coming out. All right, guys, there you go, and you have a good afternoon.